from 2008 to 2015, U.S. national debt rose about $8.5 trillion, right? Foreign ownership rose about $6 trillion. So that means that foreigners bought 71% roughly of total net new U.S. debt issuance. So for every new, $1 of debt that the U.S. issued, foreigners bought 71 cents of that. And the biggest buyers were China and Japan. So China and Japan essentially helped bail us out of 2008. And then from 2015 to 2021, the debt again increased by about that amount, like another $7-8 trillion. This time, foreigners only bought 14% of it. So they bought like $1.1 trillion of debt. So that tells you that foreigners, especially even the Japanese, but especially the Chinese, the Russians, right, even the Europeans, are becoming less and less eager to buy our debt and to go into this trade of long the U.S. 30-year or 20-year bond with us. That concern is spread throughout the financial system and is also apparent in the central bank buying of gold. So you look at 2022, 2023, 2024, each year saw record increases in, gold purchases, over 1,000 tons every single year. The People's Bank of China has been accumulating gold at a record pace. We're talking, 380 tons a year, which is, equivalent to tens of billions of dollars. But the actual reserves estimates are much, much higher. They estimate they have the official reserves say 2.2 thousand tons, so 2,200 tons. But the covert analysts estimate that they hold around 5,000 tons of gold, which would be more than the U.S., which is over $1 trillion. Japan also obviously has been, trying to divest itself from U.S. treasuries and trying to see if there's a way that they can get out of this trade. The problem is Japan is much more closely linked, especially politically, with the U.S. than any other Asian country, because we have U.S. military bases there and we have very strong, trade alliance with them. But globally, you look at Russia, you look at Poland, you look at India, all these central banks are buying gold in record amounts. And in August 2025, so just a few months ago, and for the first time in 30 years, foreign ownership of gold holdings was more than foreign ownership of U.S. treasuries. So the global financial system is already starting to make this shift. And again, it starts with the bonds, especially the long bonds, the 30-year treasuries and the 20-year treasuries. But it's going to move down the maturity curve all the way to the shorter end of the debt, and then eventually to obviously the dollar. And that's where I think Bitcoin can play a role.
We see Bitcoin emerging, and you've talked about Bitcoin emerging as this neutral reserve asset, just like central banks, with their old paradigm hat or glasses are looking at gold, they're buying gold. That's the neutral thing. Now we have Bitcoin emerging, basically born out of all this chaos that was 2008 and the not fixing of everything that happened there, right? How obviously, I think it's clear how we look at this, but how could people look at this? Why should Bitcoin be at the same level as gold, and why how do you see it emerging as this neutral reserve asset, basically?
Absolutely, I think so. Again, I would even say Bitcoin is superior to gold. Obviously, it represents a digital form of the gold abstracted into cyberspace, right? And that's much more useful, because the fundamental problem with gold, and this is why fiat was created, this is why central banks were created, like we said at the outset, right? Central banks is all an endemic problem of one of the flaws of gold, right? Gold has a lot of strong points. It doesn't rust, it doesn't oxidize, right? It's a soft metal. You can cut it easily. It's actually pretty meltable. You can purify it. You can refine it. You can use it in jewelry. You can use it in dental fillings. You can use it in space, like equipment, like satellites and stuff, because it's obviously very, very inert. So it doesn't react to anything.
Scarce enough, but not too scarce.
Exactly. Right? It's scarce. And the supply only increases by 2% a year, 2 to 3%. And so that means that it's stable, especially as a form of a monetary medium. The problem is that because it's because of its scarcity, it's not really usable as a medium for small transactions. So you think about it like, if you want to go buy coffee, or you want to go buy a burger, you want to go buy some gum at your convenience store, that would be worth a few shavings of gold, right? But who wants to walk around with a gold bar and have a knife or have some sort of tool and shave off some flakes of gold to pay the cashier for your pack of gum? Nobody wants to do that. And in monetary economics, this is a big issue because 99% of transactions happen below $2,000 and 90% below 1,000. And so it's a Pareto distribution, right? An inverse Pareto. And so because most transactions are actually what we would call microtransactions, that means that gold is basically unusable as a monetary medium, especially in the digital age. Nobody wants to walk around carrying around gold flakes, and a single gold coin is enough gold that's rare enough that it's so valuable that a single gold coin could buy you a car, right? It's worth, $4,000 today. That can buy you a cheap used vehicle in the US. That's not something you can use for groceries every week. So because of that flaw, because of its scarcity, which is obviously also a strength, but it's also a weakness, that means it had to be abstracted into paper money. And then the paper claims obviously can get all called in, which causes a bank failure, which means you need a central bank to bail out the commercial bank. And so then we create all these like systems on top of systems to solve this fundamental problem. Bitcoin luckily doesn't have this issue. Bitcoin is actually divisible into 100 million sats, and each sat is sendable instantly via the Lightning Network, which can scale obviously non-linearly in regards to Bitcoin. We don't have to settle every single transaction on the base layer. We can just use Lightning between you and me, for a $2 transaction, $4 transaction. I don't need the security and the military grade encryption of the base layer every single second of every transaction that's tiny. I can just open a Lightning channel, do a bunch of transactions with you for a day, and then close it, and then have that finality at the end of the day, and know that I'm secure in all of my transactions. And so that's what Bitcoin represents. But again, as we move towards this global monetary endgame, right, this global dollar endgame, and other central banks start losing trust in the dollar, losing trust in U.S. treasuries, losing trust in bonds, and they start buying, they start looking to other alternatives. Bitcoin obviously is better in terms of its digital aspect, but it's also more dangerous to them because it represents a future that they do not have control over. It represents a monetary system they do not have control over. It represents a place where they don't have an ability to print money and profit off of cantillon effects. And so because of that, I think, unfortunately, central banks are going to be the laggards. They're going to be the last people to be buying Bitcoin. But that's also in our support, right? We want to have Bitcoin be for the people, by the people, retail investors, mom and pops, right? Small entrepreneurs, small business people, the doctors, the dentists, the lawyers. These are the people we want to get into Bitcoin. We don't want the central banks to get there first. But like I said, the real end stages of this game are where the nation states adopt it, and I still think we're a ways off from that. But we are moving towards corporate adoption, which is good.